Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, mention and other fine folks, to the Sunday dispatch of the Black Letter, where we contemplate thoughts worth thinking. And this is your spectator of the spectacle, reporting to you live from deep inside the Upside Down. The world continues to be upside down. I'm not going to tease you too much longer about this upcoming money shot that I all want you to see. It's going to be magnificent. It's going to be terrific. It's great. Best money shot you've ever seen. But first, Mick Mulvaney dumped as much as $550,000 in stocks the same day Trump assured the public the U.S. economy was doing fantastically amid the COVID-19 outbreak. Here's this little weasel right here. I don't know who he is, but then again, I'm not American, but I am interested, of course, in American politics and economics because it affects much of the world. He's the former White House Chief of Staff, dumped as much as $550,000 in stocks the same day Trump said the economy was doing fantastically. I'm going to show you this money shot that's fantastic too. So the same day everyone's serenading us with the sweet siren song of nonsense and hopium, this clown here is dumping up to $550,000. He was or is the Director of Office Management and Budget, unloaded his holdings in 3 different mutual funds, each of which is primarily made up of stocks. The next day, the value of the mutual funds tanked, though they've since rebounded. Now, of course, I just bring this up because there's been a couple. Here we've got a few others, such as Senators Dianne Feinstein, Kelly Loeffler, and Jim Einhoff, however you spell his name, pronounce it. I mean, I can see how it's spelled right in front of me, but however you pronounce his name. I just bring this up because this is just sort of, because what we have here, folks, is the fox's garden, the chicken coop, right? And this is why I'm doing this video series, just to try and help us get through the nonsense and the fog and try and figure out what we can do with the honest truth, try and get to the truth where we can then make better decisions for ourselves long term, hopefully. But we've got these weasels and clowns in power trading on arguably insider information because he gets access to information that most of us don't. And especially when he was in the beginning stages of the coronavirus, they were getting daily briefings, which we weren't. That's insider trading, folks. All right, here's this money shot I was promising you. Look at that. It's going to the moon. We're up at almost $7.2 trillion. That's looking good. Wow. Wouldn't pay good money for that kind of a money shot, man. This is just craziness. However, take a look here. If we kind of go in a little bit closer, you can see, let's just do year to date. You can see how it's certainly starting to plateau, right? But you know what this reminds me of? This reminds me of SpaceX, Musk's awesome rockets. I mean, look at this. Rockets go almost parabolic and then they kind of plateau out, right? Once they've got enough clearance from the ground and gravity, they can kind of stay up there lofty, but it's going to still increase. They've just started doing bond purchases now, which is just the first step into the nationalization of corporations, or at least the stock market in any event, which I like to call friendly fascism, coming to a state near you. Nothing is out of the question what it would take for the Fed to start buying stocks, and I think this is the next stage they're going to. The reason I say that a lot of folks are thinking they won't, but Japan's done it. I think a couple of other central banks are doing it. Now, it hasn't worked out well for any of these. Japan's been in an economic slump for decades now, 30 years or more, with the stock market practically trailing sideways. And they own up to 80% of the ETFs, the stock ETFs in Japan, in the Nikkei index, so I'm told. Anyway, it goes on to say here, such a move likely would come in the form of a big ETF that tracks major market indices. Congressional approval would be needed to take such a step, but so far, neither of the parties have shown any political backbone or leadership whatsoever. Everyone's just kowtowing to the Fed like they're in some sort of circle jerk from the Twilight Zone or something. Should conditions on Wall Street deteriorate significantly, the central bank could go where it's never gone before.
money
The final frontier. These are the voyages of the starship
Powell.
Its 5-year mission: to explore strange,
Debt,
to seek out,
monetary and fiscal policies.
to boldly go where no
Fed.
one has gone before.
to passively intervene in the stock market for the first time ever, according to market analysts or analysts and economists. If there were any major dislocations, it is clear that they will go into whatever nook and cranny in the market that starts to choke. I mean, these are the guys, these analysts here, who talk like they're clowns. What the hell is choking? The stock market is not a living being. We know that when you have choking in one part of the market, you have choking in another part of the market that leads to dislocation. Look, you've only got one mouth, so a person can only choke one way, and that's in their trachea, right? How do you choke? Are they suggesting that the stock market's going to choke from its mouth and then also choke from its anus? I don't understand what he's talking about here. This is the nonsense these people are thinking about and trying to sell us as pablum and hopium. It's ridiculous. Following Japan, so we're all heading Japanese, right? We're all becoming Japanese one way or another. Other central banks have done it. He's talking about Japan, and they represent as much as 80% of the total market. Just utter madness, folks. But this is where we're heading, and I say that because I think you have so many baby boomers who are looking to retire any minute. And honestly, they can't afford to take a 20, 30, God forbid, let's say a 50%, 60% haircut from the stock market again, right? If we lose another 60% or more, 50% or more from here, that's going to impact a lot of retirements. And I'm not sure that the Fed is going to allow that, or if they can even allow for that. Because the baby boomers, folks, are why we're in this mess to a large degree, in my opinion. Very humble, but this is why I think we're in this position that we're in, because these folks have been creating this from the very beginning, living off the federal land, leaving us with an environment that arguably needs a lot of work, and a stock market that's going to need, an economy, that's going to need a lot of work. And they have all these mutual funds, and they're going to have to start cashing those chips in to live. And, you know, if you were relying on $5,000 a month from your stock market portfolio that's been cut in half, how do you get by on $2,500, right? So it's going to be interesting to see, but I think that's coming probably in the early part of 2021. Now, however, a lot could change. We have arguably a new government coming into power here, maybe not. Stays with the current regime, I could see it happening. Mind you, even if Biden gets in, I think I could see it happening anyway. They're all cut from the same cloth as far as I'm concerned. But there you go. I think it's coming, and at that point, I'm going to have to get out of the stock market. It's not a game I want to play. It's not a game I know how to play. I mean, if it goes by the Nikkei index, which has been relatively flat for 30 years, I don't have 30 years to be sitting on my portfolio watching it go practically nowhere. And how do you play that game? You just buy the ETF that the Fed is buying? That's gambling. That's betting on a government that's not going to change, a Fed that's not going to change. So we'll see. Bitcoin whale population approaching September 2017 levels. So I just wanted to show you this. Traders holding 1,000 Bitcoin or more since January 2020 has hit now an all-time high. You can see here that's at about almost 1,900 at the level that they've reached here, and the number of entities with a balance of 1,000. The reason I point this out is because it's important and it's helpful to gain, I guess, greater stability in the market and to make it more mainstream, but at the same time, clearly they're going to have the power to move markets. And as soon as you get the Wall Street guys, the hedge fund guys and gals, and the big whales in here, they're going to manipulate the market to some degree. So I think unless you really know what you're doing, trading for me is not something I'm doing. I'm going to just hold on for dear life, see where we go. Number of investors holding 0.1 BTC hits new all-time high. So now we're getting into the small fry, or the minnows like us. And Ether holders with 0.1 ETH has also peaked in recent days alongside gas fees. So you can see here, this is at about 3 million. This line up here is 3 million. So you can see there's 3 million BTC addresses holding 0.1 plus of coins. And that's at about almost $1,000, right, worth of Bitcoin. 3 million wallet mark being broken earlier this year. Here we can see there's an active, currently between 800 and 900,000 daily active BTC addresses. I don't know what active means, if that's sending and using Bitcoin perhaps. And then of course, according to Glassnode, Ether hodlers have peaked at almost 3 million as well, that have 0.1 ETH, which is about $30, right, or so, almost. So very interesting. Things are growing. The big whales are coming in, but I think the small fry, Joe Public and Jane Smith, is coming into the market too, and that's going to encourage. It can only be encouraging. It'll be good news for us, I think, long term, if we just hold and stay where we are. Vitalik Buterin says Bitcoin's S2F model is wrong. Now that's the stock to flow model, and I'll show you what that looks like. It's the base of the rainbow table. It's a logarithmic chart that suggests the different price targets for Bitcoin post the different halvings. The stock to flow model uses scarcity to predict Bitcoin's price, assuming that its price will rise with each halving. Ethereum co-founder Vitalik Buterin says he disagrees with the theory. In his words, the theory is set up in a way where it is impossible to disprove. Well, I think anything that pretends to forecast into the future, especially into the years and decades into the future, that cannot be disproven and cannot be proved either, right? But, we do the best we can by reading the tea leaves, so to speak. So here we go. So this is sort of the stock to flow model, as they call it, or the S2F. So it's the amount of stock that you have above ground. As I said before, it usually has historically been used to determine inflation rates and potential charting and prices for precious metals, primarily gold. So you have the amount of stock above, and the flow is the amount in gold, for instance, that's being mined out of the ground each year. It's being added to the supply. And when you get that, the bigger the number, that means there's less coming out of the ground, and there's more on the above ground, so you have a greater increase of value, potentially, anyway. But we'll go over here to see what he's talking about. So it starts up here. Here's another example. The halvings cause BTC price rises. Theory is unfalsifiable. Was the peak before the halving? Then it rose in anticipation of the halving. During, because of the halving. After, because of. The last 20,000 peak was near the halfway point between the 2016 and 2020 halvings. As you know, we just had in last month, in May sometime, I think it was, we had the last halving. And now this is fairly interesting what he says here, because was the peak before the halving, then it rose in anticipation of the halving. Was it during? It was because of the halving. If it was after the fact, it was because of the halving, right? It's becoming, there's less number of Bitcoins being mined. And this is the problem with all analysts, and why I like to have fun with them, because all these forecasters and other witch doctors really are just doing their best guesstimates. At the end of the day, nobody can read the future. If we did, we'd all be billionaires, right? Anyway, here he goes on to say what is unfalsifiability. So it's a concept worth understanding deeply. He sounds like Tim Cook. It sounds like a good thing, but it's not. Basically, the idea is if there's no conceivable future that would make you admit your theory is wrong, then your theory is worthless. Well, there is a foreseeable future where the theory is wrong. In fact, it doesn't work, right? Then it's wrong. So if these numbers, such as folks are looking at about $180,000 to $200,000 Bitcoin at some point within the next, say, year to 18 months, according to the stock to flow model, and it doesn't reach there, if it stays under 10K or even under 20K, then obviously that theory is wrong. So it's been proven wrong. But still, it's the best we have so far. Now, whether it holds up long term is another story. Bitcoin suddenly plunged to 8,900, and it may kickstart a 3-month correction. The abrupt decline of Bitcoin at a crucial price point could catalyze a multi-month correction. In October 2019, Bitcoin failed attempt at a breakout led to a 63-day correction as price fell to 6,400. In February 2020, BTC dropped to 3,600 within a 30-day period. And here's a little chart he goes to show you. I mean, this is the thing especially with the new asset class. There's a lot of volatility, as we know. Personally, I'm not looking here to trade from day to day or week to week. I'm here to hold on long term because I believe in a blockchain and cryptocurrency, especially under the current regime, current economic climate that we find ourselves in. So for me, I'm just holding on. And if it gets down to 8,900, well, it did get down to 8,900, but if it gets down, let's say, to 6,000 or even 4,000 or so, man, I'm buying. That would be a great opportunity for me to hopefully one day get to 1 Bitcoin. A dollar crash is virtually inevitable, Asia expert Stephen Roach warns. The stronger dollar era may be on borrowed time. The U.S. economy has been afflicted with some significant macro imbalances, namely a very low domestic savings rate and a chronic account deficit. These problems are going from bad to worse as we blow out the fiscal deficit in the years ahead. The national savings rate is probably going to go deeper into negative territory. It blipped up as a high savings rate currently, but I think that'll only come down in time as people start to lose A, the stimulus payments, B, the additional $600 a month on unemployment, and they're going to have to start spending their money, especially if a lot of those folks don't get back to work. America is walking away from globalization, and then he's concerned a crash could spark a late 70s type stagflation crisis when prices rose sharply with economic growth was muted. Now, the problem, folks, is that everybody has an idea, right? Everyone has an opinion of where things are going, including this internet rambling dude from Blabberlon. But, I'm just trying to understand these things, and along with your help in the discussion, figure out where we're going and how we can best move towards a brighter future for ourselves. And so I think currently, with the Fed printing all this money, and as long as people are not working and spending money, they're scared to spend money, we're going to see some deflation. Beyond that, of course, the more apples there are, the cheaper that apples have to become. Otherwise, they will spoil, right? I think this is what's going to lead to inflation eventually. Just seems common sense, folks. What you sow, you shall reap, right? Isn't that from the Bible or something? And stocks rise after Fed triggers risk-on sentiment. Federal Reserve follows through on a pledge to buy corporate bonds under an emergency lending program. This is not new. They had said they were doing it. Now they just gave us a bit of an update, I guess. This is the first step to the nationalization, probably, of the economy in the United States, and that's very troublesome. It's not going to be good for anyone, I don't think, except perhaps the very rich, not us hoi polloi, as they like to say. Anyway, folks, that's it. Thanks for joining me on this journey to try to make sense of the senseless. So I think what we have to do is just to try and figure out a way forward that makes sense to us. For me, that means being very cautious about the stock market, more interested in silver and gold, but silver primarily because I'm just a po boy from a po family. But there you have it. Stay well. I appreciate you guys. Thanks for joining me, and we'll talk soon. And remember, dum spiro, spero.